Hey learners! Welcome back to the channel. In today's CMA USA Part 2 Marginal Analysis lecture, we're diving into an important and highly tested concept, the keep or drop decision. Whether it's a product, department, or division, we'll figure out how to make the right call, with zero confusion. This decision helps a company analyze whether to continue a segment that seems unprofitable or to drop it to save money. But before we jump to conclusions, we need to dig deeper than just the profit or loss shown on reports. Here's what we're really asking. Will dropping this segment increase or decrease our total operating income? That's the decision maker. When we analyze this, we only consider the relevant costs, the ones that change if we drop the segment. Let's list them. Variable costs like direct materials, labor, and so on. Direct fixed costs, the fixed costs that will go away if we drop. Revenue from that segment, because it'll be gone too, and any opportunity costs or benefits from using resources elsewhere. But we exclude allocated fixed costs. They don't disappear, just get redistributed. And common fixed costs. They stay even if the segment is gone. So, here's the golden rule. If dropping the segment increases your total operating income, then you should drop it. But if dropping decreases your income, you definitely want to keep it. All right, let's break it down into a quick table format. You have the description and the amount. First, there's lost revenue from dropping, which is shown as a negative amount. Then, you add saved variable costs and saved direct fixed costs, both as positive amounts. The net effect on income could be positive or negative. If the result is a positive number, your income increases. But if it's negative, you're honestly better off keeping the segment. Don't be fooled by reports showing a segment loss. Many times these segments actually contribute a positive margin that helps cover fixed costs. So, dropping it can actually reduce your total profit. Okay, let's memorize this with a simple trick. D stands for direct fixed cost savings, R is for revenue lost, O means only variable and avoidable costs are relevant, and P is for profit change matters. So, if I gain overall, I drop. If I lose, I keep. Easy, right? All right, let's do a quick recap. Keep the segment if operating income decreases when it's dropped, and drop the segment if operating income increases when it's dropped. You should keep it if it covers its variable and direct fixed costs, and drop it if fixed costs can be avoided and saved. Also remember, common fixed costs still need to be covered, but dropping makes sense if there's another profitable use of resources available. In real-world decisions and even on the CMA exam, you should always focus on how the total operating income is impacted. Don't just look at the net income from the segment. Make sure to really dig into the cost behavior. That's it for today's lecture on keep or drop decisions. If you found this video helpful, do like and subscribe. And hey, don't forget to comment below if you want practice questions or real-life examples explained.